Alright guys, so let me show you guys the only strategy you need to become profitable in this particular space. Now this particular strategy helped me turn $50 into $2,000, and I'm going to show you guys how I did that right now in this particular video. Okay, so all you just need to do is to sit tight, watch this video from beginning to end to understand how I was able to turn $50 to over $2,000 using gold. Okay, now this is a very straightforward strategy. All you just need to do, you need to understand it. So make sure to like and subscribe right now, and let's go over to the chart and let me show you how this process was done and how you can do the same thing right now and make so much money for yourself. Let's get started with this video starting right now. Now first off, before we get started, I need you to understand the strategy we trade right here. Okay, what we simply trade is structural liquidity and area of interest. It is a very simple concept, and that is what I'm going to be applying right now to show you how I did this trade. Okay, structure. First of all, you understand directional bias. You look out for your structure, you find your structure, you find your structure shift and break of structure and all of that. And after that, we identify inducement liquidity, and we run away from the traps. We run away from the retail ends where people are being cut off. And then after that, we now find good area of interest and we take in our trades. And that is what we're going to be applying right now. So let me show you how this is done real quick. When I jump into the charts, I don't just get started with trading. I don't just jump into trade and all of that. I need to understand the concept of what is going on first before I start my trades. Okay, now first off, this is on the 4 hours time frame. Right now we have the 4 hours time frame, and this is the structure we have. And as you can see right here, you get to understand that we actually let's say we had a trend around here, and after this trend we had a breakout right here that led to this change of character. You can see right here, and then the market flying up to this particular point. Okay, now this is on the 4 hours time frame, and this actually tells me right now that the market is bullish, and I'll just have to keep note of that. Okay, now the next thing I'm going to be doing right now is to go over to the lower time frame. Okay, this is 4 hours. I'll go over to maybe the 2 hours time frame to actually understand the concept of what is going on. Okay, so going down right here, I can see very well a very clear market here. First of all, I still have a trend right here that was actually a downtrend, and from this other side, it's actually coming all the way from this upside to the downside. But let me just make use of this area right here. This is enough. This is actually enough. Or if I want to draw this sketch in another way, I can actually still have my trend line appearing this way. Okay, so I can actually have my trend line appearing this way, and it is still all good and easy because I have about 3 touches right here, which actually confirms the trend line. But I don't want to use this. I want to just use this area. Okay, so this is what I want to use right now. This is in 2 hours, and this is what I have. So I have a trend to the downside right here, and then all of a sudden we have a break of structure right here to the upside, and this is what we have. So now that we have a break of structure right in this particular market, it would not have been good for me to have entered anywhere around here because I needed to have a confirmation, understanding the structure, finding the liquidity, the inducement before going into any trade. So all I need to do right now is to scale down maybe again to about 1 hour. Okay, so scaling down to 1 hour right now, a few things are just beginning to show up more and more. So first of all, here we have a structure to the downside, and wherefore we created a block here. Okay, so we now have a block, an area of interest here, or a point of interest. So that's the first thing. So right here we had a change of character. Okay, and then below or around this change of character right here we have a breaker block. Okay, and this is the breaker block around here. There's a breaker block here, which the breaker block is already highlighted using this indicator which I use. So I may not need to highlight it anymore. I'll just need to make sure it's there. So this is it. This is a breaker block here after this change of character. So right here again, we still have another block, which is very important that we get to note. This block right here. Okay, so we have another block right here, and we have a breaker block below it, and then we have another block down here, and we still have a tiny block right here, just a tiny block around here, which is still very much notable, but we can just ignore this one for now. Okay, we can ignore this because we're not really having any sequence with this particular lower block. I think this breaker block and this other block around here can actually do the job for us. Okay, so now we have a change of character. Market is bullish. I've actually understand that the market bias is that we are in bullish direction. So every single thing I'm going to be doing in this market is to be looking for an opportunity to keep buying to the upside. So for me to do this right now, first of all, we have a change of character or market structure shift to the upside. And right now, this is the first inducement we have right here. Okay, so having the first inducement, we are only supposed to take our trades from the area of interest, which is supposed to be from the breaker block or the other blocks. Okay, so right now, first off, this is the first move to the upside, and then this second move around here is what we call the liquidity. Okay, now it's what we call the inducement liquidity. That is the market first pullback of the market, and this is going to entrap a lot of traders into going into buy. Maybe when they say that the market have actually calmed down a little bit, they'll just jump into buy because they want to make money immediately, which is very, very wrong, because you have to take your trade not just because you've seen the first inducement liquidity, but you need to take your trade from an area of interest. Okay, now getting started right now, we saw another opportunity right here. This market coming down again right here, and this trade is actually not all good, because from right here there's a block around here. Maybe this is 1, 2, 3 blocks I'm considering right now. There's a block around here, but this particular block, as you can see, it is unmitigated. It has not been touched. But for me, since this is over 1 hour time frame, I'll just need to work with this block and this breaker block. So what this simply means is that I'm actually expecting that we should have a buy to this particular point. So I can just put a buy projection here. So I'm expecting a buy at this particular point, and maybe I can go over to 4 hours time frame and target the next high. Okay, and target the next level. So you need to understand this concept for you to understand what exactly I'm doing right now. Okay, so this is 4 hours right here. This is 4 hours, so I can target the next high, which should be around here. Okay, good. Now getting back to 1 hour time frame, which is what I started with, and let me just adjust this. Let me just adjust this. All right, so now I should be expecting a buy from this particular level continuously to the upside, or even if the market, to make things easy for me, I can still adjust my stop loss lower, and then to cover this area of breaker block, maybe if the market decides to clear out this other block and then to take out into this breaker block. But the other block is actually a good point of interest. But before that, this is actually 1 hour, and we have a lot of waiting before the market gets to this particular point. So what I need to do right now is to find an opportunity to sell the market from where it is right now to this downside. And for me to do this, I can't find any opportunity looking at this right now, because right here we still have a change of character here to the downside. If you can see this, we have a tiny change of character around here, and I think if I go down to the lower time frame, my indicators will be able to show me that. So let me just go over to maybe 30 minutes time frame. Let's see if we get something clear. All right, you see exactly at that point right here, we had a change of character right there. So there's a change of character, so I just need to remove this. Okay, so now we have a change of character. Remember, we have a trade in waiting here, which is just standing here waiting for us real quick. Okay, so now we're still looking for an opportunity to sell, and then this is what we have here. We have a change of character here. We have the first inducement liquidity pull to the upside, which actually mitigated this point. And then around here again, we have a tiny block around here, which I'm not going to overlook. Okay, now I'm not going to overlook a tiny block around here. Now you may not get to see or understand this block very well, but maybe when you go down to the lower time frame, you should be able to understand this particular block and how it works. Okay, so right here we have a block around here, and then outside that we still have another block which is actually showing around here, which are all points of interest. Okay, now remember that the main move of the market is bullish, but at the same time, when we have this bullish move, there must be a complete correction of the market before we get in. We are not just going to be getting into the market. There must be a complete correction of the market before I go into buy or sell. Okay, so if I'm going for a long-term buy, I must wait for the short-term correction or short-term sell correction before I continue, because the market cannot just fly to the upside. So all I need to do right now is I have this block here, and I have another block here that appears nice around here. But if you notice something down over to the 15 minutes time frame, we have that this block below here has actually been mitigated. Okay, as you can see right here, this is the block, and we have these other candles that have actually touched this block, which is making it a little bit invalid because we are not going to be using mitigated other blocks. Rather, we're going to be using the unmitigated other blocks. Now we have this last block around here, and then remember that the balance I had on this account was $50. So I was just looking for a zero drawdown trades, and I was gonna be risking high on this trade to making some good money. So all I need to do right now is to target this particular block. So I place my trade right on this particular block around here. So my stop loss, in fact, the whole $50 was actually my stop loss. So I was just trying to try out the account. Okay, so the stop loss is everything around there, and the target profit is just at this particular block. Okay, so we can actually just adjust this particular candle here, and then let's have this right now. So let's see what's going to play out right on this particular market from here. All right, so as you can see right now, the trade is just easily going up to that upside. Now, looking at this trade right now is going to be very, very entrapping for a lot of traders, because a lot of people are just going to be going into this trade, and trust me, they are going to be missing out. Okay, a lot of people are going to be going in. Okay, now let me explain a very few things before we continue. Right now, the trade has been triggered right here, as you can see, but a lot of people are going to go into buy around here because maybe probably they might have analyzed on the lower time frame that probably the end of the buy retestment, a retest on the trend line or stuff like that. But I'm sure that if you use the lower time frame to actually analyze this market, like 5 minutes and 10 minutes, you should actually find this trade looking more like a buy opportunity. But the truth is that when you are able to analyze your trade from the higher time frame, you are going to see very much clearly what you are doing. For internal trades, I use the lower time frame, but for major moves in the market, if I want to take major moves in my trades, I get to use the higher time frame. In fact, I trade in 1 hour, I trade with 30 minutes. This 15 minutes is because I'm trying to catch a correctional move, right? Just because a correctional move, because that is not the main move on gold. Okay, so now what are we going to do next? What we're going to do next is I'm just gonna continue this, so we get to see what happens on this trade. So right now the trade has been triggered, so we're looking forward for a full TP on this particular trade. Now the trade is just moving, is moving a bit nicely right now, but we're actually getting to see a very clear picture soon. All right, so it have tapped into this block. As you can see, zero drawdown on this trade, meaning that the market just tapped into the trade and it didn't even reverse, it didn't even go back, nothing at all. It just swept through, and then you can see it moving. All right, so it's moving on ice, and then this trade is I think I have a risk to reward ratio, and then the risk to reward ratio right here is about 1:4. And because I entered this trade with about 1 lot, and I didn't consider the stop loss because I was just pretty sure that there should be a reaction on this particular trade. So because of that, I didn't actually enter looking at the stop loss and all of that, but I was actually expecting a 1:4 on this. And on the 1:4, I was supposed to be risking about $500 to get about $2,000, and I didn't have enough stop loss, but I had an expectation of zero drawdown, and that was the reason why I entered this trade with $50. And then this is what we had. This is what we had. As you can see right here, full TP on this trade, and this is from this point to this particular point, and the market has actually touched our entry point. Now, remember, we have another trade right here that has just been triggered. This trade has just been triggered. Okay, now I think I shared this particular trade with my community, but because of conservation purposes or risk conservation or risk management purposes, I actually adjusted this trade I actually adjusted this trade. I placed this trade on the next block around here because I expected that this particular rejection and correction may actually throw in a lot of wicks. And because it throws in a lot of wicks, I actually control my risk on gold. And I was expecting that the market to actually take him down to the next block and then maybe covering a complete 50 to 60% of this fair value gap available here, and that was why I placed this trade here. So the trade I actually called on the community on this particular buy did not get triggered. So but what actually happened is, because this particular block here was actually a very nice block to get into the trade, and that was what we were supposed to have. So this was supposed to be from this point, and then if the market continues, and I think a news actually happened, and then from that news we actually had a boom straight up to the upside, and that was it. Okay, so now this was how I was able to flip $50 to over $2,000 using this simple strategy. And like I said, this strategy is very simple. It is just structure, liquidity, point of interest. And if you want to know more about this particular strategy, just make sure to join our Telegram community. Hit up my DM and I can actually tell you one or two things I know about this. But make sure to join our Telegram community for more trading insight like this, so that you can actually learn how to trade and learn how to make so much money for yourself. And this is the result on this particular trade. As you can see here, about $2,900. Sorry, as you can see right here, about $2,093 actualized on this particular trade. And that will be it for this particular video. I'll get to see you guys on my next video, and goodbye for now.